Joined in studio by the CEO of AfriAsia's Bank. Now, they raised an additional capital of $476 million, increasing their firepower as they try to expand into the African continent. James, thanks for your time. Have you been in Joburg for too long?
Just got in this morning, but I'm here every other month because we have a rep office and a corporate finance team.
Have you done a deal since you came in this morning?
Not yet. I'm working on a few.
Are you looking around?
We are.
Now, you are talking about expanding into Southern Africa, and you're not talking about South Africa. Maybe let's just distinguish the two. Why Southern Africa and not South Africa?
Well, we already have a presence here in Southern Africa. We've got almost 20 people. We have 15 people in corporate finance in Cape Town and Johannesburg, and 3 bank reps. So we've already got quite a presence here. And now we're looking at other opportunities in the region.
Yeah. So. Now, when everybody speaks about, Africa, they speak about, Africa's time has come. We're seeing FDI flows come into the continent. We're seeing Africans investing within the continent. Here's a real example. Yes. Now, you are setting aside $16 million, 776 million Mauritian rupees, looking at the SADC as well as COMESA regions. Just give us the kind of markets you are looking at within that sub-region.
Right. I mean, Mauritius is part of SADC, part of COMESA. We've got free trade agreements. So for us, the whole eastern southern sphere is where we're interested in. So we are actually looking at other opportunities in Kenya, Tanzania, perhaps Zambia. But the first one that crossed the post was Zimbabwe. And that's what we've done so far.
What are you looking for?
We're looking to invest in commercial banks, which need what we have as being an international financial jurisdiction and quite an international banking operation. So we're not trying to change the management or change what they do. We want to be able to bring an international connectivity. Investors in the Far East or other parts of the world like to be able to deal with banking groups to have actual on-the-ground capabilities increasingly in these markets. So that's what we're trying to do. So
you're going acquisitive rather than organic. Is there any specific reason why you've gone acquisitive?
We've been organic pretty much till now, other than some smaller transactions. But to actually have a network in some of these markets, we won't do big, huge retail banks, but so it'll be acquisitive, but acquisitive which is not on a transformative scale. Yeah.
Now, you ended up in Zimbabwe where you bought 35% of Kingdom Financial Holdings, a company I know very well, I must declare. It was established by one Nigel Chanakira, who I grew up looking up to. Now, you have gone into Zimbabwe. Some would say you're being brave, and I'm playing the devil's advocate here because of the economic as well as the political environment the country has gone through in the past decade.
Right. It's brave, perhaps, but I think they already have a transition government power sharing formula in place. They're dollarized. I might say that they're actually less risky than a place like Greece or some of the other bankrupt Eurozone countries because they haven't gone through that pain of adjusting to a fiscal straitjacket. So in fact, Zimbabwe's got the ingredients in place to really do well if they stick to that discipline. But in other markets, you will still have to go through a lot of pain. So I actually don't think it's that brave. I think it's a great opportunity.
Yeah, you're taking up a 35% stake, so not quite a controlling shareholding there. What are you trying to do with that investment?
Again, we're not looking to take control in banks. We're looking to have partnerships where we can commercialize, do some joint branding initiatives, do joint lending, and have a meeting of minds with people. So again, our intention is not to take over. Our intention is to work as partners and have mutual and joint branding efforts.
Yeah. Now, you're looking at a large region here. SADC and COMESA, as we said, I think it's a region of around 300 million people or thereabouts, according to some people. Now, in terms of finding those opportunities, has it been difficult?
It has been a little bit challenging to find the right partners. I mean, there's lots of banks which are looking for capital or would like to have foreign investors in them, but we wanted to find ones which would want to have us as a partner, given what we have as an AfriAsia franchise. And we do work with a lot of major private equity firms who are also investors in us, and they sometimes put these names in front of us saying, hey, these might be good partners in this market for you. So it's a bit of opportunistically driven as well.
Yeah, and in terms of the countries that you're focusing on, you mentioned Malawi potentially as one of them, and that's also another country that's going through, if you like, a bit of a political crisis and tensions in there.
Probably looking at Tanzania, Kenya first. Malawi Kingdom did have a part of an operation there. But again, we will go where our partners and shareholders can bring us ideas as well as our own research on the ground. So it's not a fixed mandate, but we know we want to selectively enhance our network in these markets.
And the regulatory environment, what have you found when you compare it against where you're coming from? Because Mauritius is well known as a very well-regulated market.
Well, I think the central bank there has taken quite strong steps to force recapitalization of the banks, and the dollarization certainly puts them on a path of really fiscal reform. So I found it so far quite our approvals and everything's gone through quite smoothly, quite effectively.
Yeah. How far would you say you are away from your next deal, and where is it likely to be?
It's going to be somewhere in the region, and it could be in the next few months. that's probably fair to say.
Yeah. When you look at the investment climate across Southern Africa, you're looking, of course, at Southern Africa, and we'll talk about the rest of Africa in a moment. When you look at the investment climate across Southern Africa, what would you say are the main attractions that would bring in a foreign investor, a foreign investor from the region, in a sense, such as yourselves? Again,
you mentioned the population size of these COMESA SADC free trade zones, which is growing in affluence and increasingly middle income consumer. So that's why you're seeing telecoms and financial services and consumer goods being very attractive. So, I mean, the growth rates, I think, are sustainable now.
Sure.
There's enough fixed investments going on. There's enough regional integration going on. And the appetite for risk in Africa has changed in the last 5 years since we set up the bank. I started my career in banking in Southeast Asia in 1992, and this region reminds me of where Southeast Asia was 20 years ago, and that's what's very exciting.
I was actually going to ask whether there are any similarities and what those similarities are.
I think they're under-recognized opportunities, but you need to be on the ground to spot them, and I think that's what people saw 20, 25 years ago in Southeast Asia. You know, what's the difference between a Thailand and the Philippines and a Burma? Now people are starting to look very critically at the countries here in Africa and saying, you know, despite its political challenges the last few years, Kenya is still investable.
True.
And that's what people are now saying. There's a certain maturity and stability which they can get more comfortable with.
Yeah. When we look at the countries that are growing the fastest in Africa, if you look on the map, for instance, you're talking about you know, Ghana, you're talking about Angola, you're talking about perhaps Gabon, but we're talking smaller bases here. But you're not talking about those names.
I'm talking about names in Eastern and Southern Africa which have more direct links with Mauritius as a trade and financial center. Yes, there's lots of opportunities, and very big funds I know are looking at those opportunities.
Sure.
We're not a fund, we're a bank, so we want to go in the markets where we can be more directly lending our expertise as operating bankers for these kind of
What
banks.
about Nigeria? We have to ask about Nigeria.
Yeah. Again, a very big market. Probably I'm not at the size yet where I would find the opportunities which would be meaningfully able to us to execute on. And again, it's not the most natural partner for us as a banking group, but I do know many private equity funds which are actively looking at Nigeria.
Absolutely. James Benoit, CEO of AfriAsia's Bank, thank you very much for joining us.
Thank you.